Okay, the housing market is crashing, something that we've been talking about and saying for a long time, and I have the statistics and the data here to prove it. So this is something you need to watch before you buy a house, before you sell a house, because the market for the first time in the last 6 years is pretty unpredictable. So what do I know about housing? I'll say this under 30 seconds. I've sold over 200 houses and I flipped over 100 houses, and I have 8 Airbnbs. So this is definitely my passion, and I know exactly about this stuff. So let's chat about it. So obviously mortgage rates spiked this spring, but they're also going to spike again when the Fed meets probably in the next week or so. So that's going to be even worse, right? So this article, even though it just got published, is already a little bit out of date because of that future inflation spike that's going to happen. Now, we really need to focus on that, and it's going to be really meaningful as we kind of get into this data. But for right now, 98 major housing markets, only 50 markets remain at the peak. And I think that I've been seeing some people that say some of this stuff is overhyped, but I don't think it is. I think the fact that the main thing, if you go right here, that is dropping is the frothy markets and also the kind of tech hub markets. So first is the high cost tech hubs. The fact that biggest drops in home values can be found in San Francisco, down 10% almost, well 8.2% from its peak. San Jose and Seattle down 8% as well. So they're all showing these drop offs. And if you remember, this is pretty similar to what happened in 2006, 2007, 2008. If you're watching this channel, you might be a little younger than being able to remember that. I was in real estate because my family was in real estate, and I worked in their office ever since I was birthed. And so that's obviously an exaggeration, but not long after my birthing was I in that office. So I was able to see it particularly well, and it was a very easy thing to look at, right? Because the most expensive places softened first, and then it was kind of like a staircase down. So as you got less expensive, those things were not softening as much. My main concern here is something I'll tell you about in 1 second, but it's from my own personal experience, and it's worth looking into. The second group includes frothy markets. So all those things that you've seen that have been kind of super sexy, they're almost like those B+ markets, right? Which I think would be pretty much considered A- markets now. But Austin, Boise, Phoenix, Reno. The pandemic housing boom saw house prices in markets like those two go far above what they would have seen, and even to the point of being overvalued, even though I feel like that's such a subjective term. Can't really know what's overvalued or not. Basically, the value is what someone's paid for it, but that's neither here nor there. So there's 50 more yet to fall. Now, if you're in one of those 50s, you really need to check this out, because this could really determine, when's the best time to buy or when's the best time to sell. But if you traditionally look at it, some of the main things that were the kind of slowest risers, but also the best investments over the last 5 years, was the Sun Belt, the Southeast specifically. So the Southeast had gained so much population growth in the last little while, and so had the East Coast in general. So Newark, Louisville saw more modest price gains during the pandemic housing boom. 11 of these markets are in Florida, which remained surprisingly resilient this summer. I don't think that's surprising at all. If you look at it like a staircase, the expensive ones goes first, and then you have those first-time home buyers or those retirement buyers, right? So those people that want to have a good house with less taxes and money consciousness. So when you think about the Fed hiking interest rates, you think that money is being taken out of the economy. Because of money being taken out of the economy, you think, or I think the proper mental model to think here is, all right, there is less money to go around. People are going to be tight with their money. So what does that mean? So that means that they go to houses and still buy houses that are affordable. They don't buy the luxury houses. They don't buy the vacation houses. So if you are in a frothy market or a tech hub or anything else like that, and you're thinking about selling, for me personally, I would be doing that right now, or I'd be putting that up there right now to try to at least hit it before the market softens anymore. We know that interest rates are going to go up again. We know that there has been a very clear interest rates up, pricing and demand down. We know that this has been very clear. Let me show you something too, which is really, I think, concerning here for me personally. So this is a first-time home buyer house in a market that is in the South, and a great unemployment rate, which usually means that the demand for houses are really high. This is a flip of mine, and you can see right here that it was done well, right? Not the most high-end Taj Mahal flip, but it's a very solid flip. I think it looks really good. Okay, so this is not a story to brag on my flipping skills or lack thereof, but last year, if we would have put something like this on the market, it would have been literally multiple offers in a day. This one is under contract now, but it took 14 days, and the amount of showings was probably about 50% less. Now, why is that such a big concern? 14 days is not a big deal, but it's a 50% softening just on this small anecdotal evidence. And not only is it 50% softening, it's a 50% softening of the market segment that's supposed to be most protected, which is those first-time home buyers and lower cost houses in great markets. So this is like one of the best markets you can have. This is one of the best price houses you could have, and it's done up to kind of perfection. And the fact that it still had a slow sales cycle compared to what it was is concerning for me. So if you're thinking about buying a house, this obviously indicates that maybe you should wait. Of course, just on a macro sense, I don't believe in timing the market. You basically just do whatever and whenever you want. But there seems to be a trend where interest rates increase, the frothy markets go down, and the overhyped Western markets, high tax and cost areas lose home value first. In significantly overvalued housing markets, recession means that they'd likely see home prices fall 15 to 20%. I believe this. They said, however, no one is predicting U.S. home prices drop on par with the last housing downturn. U.S. homes price fell 27% between 2006 and 2012. They said, I know it sounds really, really bad, but the reality is you have to take a longer term lens on this and have some perspective, because those markets all run up to 30, 40, 50% over the last year or two. So we really compressed a year or two, a decade of home price appreciation, which is very, very true. This has been the most massive historical increase of home prices in anyone's kind of recent memory or in our recent investing journey. So to see a little bit of softening still puts us way kind of above average of where home prices should be. I do think there's a overarching housing crisis and not enough houses for enough people that want to buy them, especially for millennials like me, an old millennial. Ugh, woof. So even the forecasts are right and prices do decline double digits, we're only going to be resettling down to what home prices were in 2020, 2021. So I think that is so true and so good to remember, because we are still way above average, and if we lose enough, we still have that 2021 prices is where kind of we should be, because it's just gone out of control to the point where no one could buy a house, and that's not what you want. You want people to actually be able to transact, actually be able to buy, actually be able to increase their generational wealth with this. The ongoing housing correction has seen high-end homes sales decrease at a faster rate than other points. Literally just called that. That, of course, skews both average and median home prices. A proprietary calculation of local home values helps you shift out the noise from both new and existing homes, which is so true. So if you like this content, go over to my Instagram. Look at that handsome devil right there, Stephen_Clarke, CLARKE. And you can drop me a line about real estate things in general. You can see I put that house flip right there. You can see when I was skinny. These are other houses I flipped somewhere on there. So you can see all that. And they mostly just come up in my stories. So I would definitely go over there and shoot me a question. If you have any questions about real estate investing, Airbnb investing, long-term investing, and or house flipping, you can go ask them there. If you want some coaching on that, you can hit me up through this or go to the link tree. I will put the link tree in the description of this actually. So you will have it, and you can go down there and, good God, all right, let me just copy it. Thank you. You can go down there and do one-on-one coaching with me. Not super expensive. I actually just do the coaching because it's fun to talk to other people that have the same interests as I do. Entrepreneurial journeys are very, very long slogs, lonely roads, and for me, I get really inspired talking about people that like to talk about what I do. So it's barely enough money to cover my time, but it is fun to be around people that like to talk about what I do, which is why we have this YouTube channel too. All right, more market updates soon. If you're interested in crypto, I have a crypto channel too. This is my passion, though. Don't tell crypto. All right, bye.